Hello and welcome to the week ahead with me, Chris Pollock. Let's have a quick look back on the week behind us, have a look forward to the week that is ahead of us, and probably look even further ahead to the week that follows. We're not too far away from the US elections now, the 5th of November. It is very much looming. They're saying it's in the balance. The odds are suggesting that, 60% chance of a Trump victory at this stage, or certainly the betting markets are. But yeah, it's very much in focus. So as much as we're going to be interested in the news that's coming out this week, eyes are already on what's happening next week. But let's start with last week, as we always do. And I want to start with the oil market. Right, the oil market is one. If you are trading this and you're trading swing positions, I always suggest to people never, ever be short oil over a weekend, right? If a bomb goes off, if a war begins, if something untoward happens, you can get some horrendous gaps higher in oil, right? The Ukraine war, when that was kicking off with Russia and Ukraine a couple of years ago, I think we had a $12 gap over a weekend, right? So not to be short oil over the weekend is one of the rules that I will always stick to. I always say don't be short oil over the weekend. This weekend was one of those weekends to not be long oil over a weekend. The Israel strikes in Iran did not affect any of the Iranian oil fields, and therefore the risk premium that was priced into oil on Friday night was hugely undone. And the gap open from Friday night into Monday morning, or the small hours of Sunday morning, was $2.70 gap lower. For those of you new to trading, if you were long here and you had to stop 50 points below, you are filled 200 or more than 250 points lower. A stop order is just a market order when the price crosses through your level, the market order is initiated and you're sold to the next buyer in the market. On this occasion, that was a long way down. Hopefully, no one got hurt on this one. Gap risk with things like gold and oil. Again, I will never be short gold over a weekend for the same reasons. But we didn't get quite the gap lower. But again, we did get a little bit of a gap lower as that risk premium was taken hugely out of the market. So when there's geopolitics, please be aware of the risk factors that are around with these risk assets like gold and oil. These two commodities are really good to trade at the moment, but I would always like to be flat by Friday night. Okay, so let's look at the week that lies ahead of us. There are plenty of things that are unusual in this week, actually. Well, what isn't unusual is a very quiet Monday. Again, we get a lot of these quiet Mondays at the moment. Next Monday as well, likely to be very quiet ahead of the US elections and also after what is an unusual Friday for us. So really the day, or the week, should I say, is really going to start on Tuesday this week. And this is probably a good opportunity to remind everyone of the changes of the clocks in Europe. So this time is GMT. You'll notice that the data that's coming out that normally comes out at either 1:30 p.m. UK time or 3 o'clock p.m. UK time. This is now 1 hour earlier. Jolts and consumer confidence normally out at 3 p.m. UK. They're now out at 2 p.m. UK. And the markets in the US for European traders will be open that 1 hour earlier and will close that 1 hour earlier for 1 week. The US will change their clocks themselves next weekend. And for us in Europe, this will all filter back to normal. But do be aware it can take some getting used to. And sometimes this lasts a couple of weeks at this time of year. But for this year, for the way the calendars have fallen, it's just that 1 week where we have that change in the timings. But get used to your shorter mornings if you're trading in Europe. The opens will sneak up on you a little bit this week. But yeah, beta 2 as well, a little bit earlier on in the day. Quite like this sort of time difference, to be honest. Gives me a little bit more meat of the US session to trade as well. But these JOLTS figures, these are the job openings and labor turnover survey, kind of the second in command to the non-farm payroll figures in terms of job numbers these days. And this always precedes the non-farm payrolls number, which, well, let's get straight to it, right? Let's roll down to Friday. Unusually, this is out on the 1st of the month. Normally, non-farm payrolls is the first Friday of the month, unless the 1st is a Friday. More recently, I think this is the 3rd over the last 2 years, which they've managed to get out on the 1st of the month. Perhaps the cynics among us might suggest they want this number released before the election. Let's see. So this means that all of these jobs figures that we get, the JOLTS numbers that are coming through on Tuesday, the ADP figures that we're going to get through on Wednesday, and they all lead up to those non-farm payroll figures that we're getting this weekend, just before the weekend. So yeah, all eyes really on jobs, I would say, this week. However, there are some other bits and pieces to look at. The UK budget is in place, so this is the first Labour budget for nearly a generation, and first female one that we've had as well, female chancellor. So this is going to be unusual, but it's going to be something that the market is very much focused on. The gilts are going to be busy on this. Pounds, FTSE, the autumn statement. This is the first of a new government. These are always very important. So of all of the budgets that Labour will propose, this one is likely to be the most impactful on markets, and therefore any UK pound pairs, UK markets, UK stocks that you might be trading, you may well want to be wary of what you're doing with them on Wednesday, as this budget comes through normally around midday. Scrolling on, I mean, we do have GDP figures out in the US for those of you who are familiar with my where are we? What moves markets? The GDP figures do fit or sit quite low down on the volatility because it's very much a backward-looking number. So I wouldn't care too much for this figure, but it is down here in red. If anything, I'd be more interested in, or used to be the last couple of years, more interested in what was going on with the GDP price index, inflation component of this. Yeah, something to look at again. Inventories normally out 3:30 at that earlier time, 2:30. But then getting policy rates in Japan. So Japan have this is something else we can talk about from last week. Actually, the Japanese elections over the weekend got a hung parliament. We don't have any clear majority in Japan, and this has led to some uncertainties and weakness in the yen. So the yen, if we look at this on a daily chart, is posting levels. So this is the dollar against the yen. It's posting levels we haven't seen since back to July of this year. So we very much V-shaped out of that low that we had. Crazy the volatility we've seen in this asset this year. Since July, we've been up at 160s, down to 140s, and now we're up to 153. So plenty busy in the dollar yen at the moment. But we've seen that gap as well in the yen over the weekend, as the dollar yen strengthens because of the uncertainty that we're seeing in that Japanese currency. But maybe we'll see something a little bit clearer when we get some monetary policy out. Yeah, I'm not sure. I don't think Japan changed their clocks, if I'm not mistaken. Normally, this is out at 6:30 UK time. Try and do some mental gymnastics to work out exactly what time this will be out on Thursday for you. Everything's out a little bit earlier, so maybe it'll be 5:30 for a press conference. A little bit early for me to be in the office these days. I'm sure one or two of us will make it in for that. But then on to the price index. Again, if the Fed are going to care about any moves in inflation numbers, the core PCE number is their favored. We're also getting the employment cost index out at the same time, as well as unemployment claims. So there's quite a lot going on here. This is only a quarterly number, actually, the employment cost index. It's nice, actually. I think they put this down as a high impact news event because it didn't used to be. So I think this could actually be quite a volatile 12:30 PCE, maybe not being the most important bit. The employment cost index, the longer term inflation number, I think might be something that moves markets. So do be aware of this on Thursday. Out of the US, Chicago PMIs on the list, but not high up it. And then we roll into Friday, where we get some lovely CPI numbers out of the Swiss. We do like these figures early on a Friday, but really it's all about non-farm payrolls. There'll be maybe a trade at 7:30, and I'll be doing absolutely sweet FA until we get to Friday afternoon and the non-farm payroll figures. It's going to be lively, undoubtedly, especially ahead of an election. Are they going to throw some very favourable numbers out to get Camilla's chances up? We shall see. But yeah, we're expecting a pretty meek number, right? 110. We haven't had too many sub 100 numbers for some time, right? We did have an adjusted one here to 89. It's been a long time since we've printed a two-digit thousand jobs. So what's this? 49,000 back in February 2021, and was the last time we had anything less than 100,000. So anything, I'll probably be on the bid here. I would suggest we're going to be a little bit higher than that. Would be my expectation, especially leading into an election. They're probably not going to want to throw roll the dice on fear rolling into an election. They are. The ISM manufacturing numbers in here. So really the whole week is leading up to the non-farm payrolls, but there are other bits and pieces. A little bit in the bond market. On Monday, we have the 5-year notes and the 2-year note both out at that earlier time as well for us in Europe. And we have a 7-year note out on Tuesday. So they're the big bond auctions this week. The biggest thing of all, I would say, is actually the earnings. Yep, the Magnificent Seven, the Mag 7, 5 of them report earnings this week. So Alphabet, the parent company of Google, is out on Tuesday night after the market closes. All of these are after the US markets close, albeit that close for us in Europe at least, be that 1 hour earlier. Wednesday, Microsoft, Meta, Facebook. These are the 2 other behemoths. And then we have Amazon and Apple out after the close on Thursday. So to give these numbers some perspective, if you're looking at Apple with 9% of the NASDAQ, Microsoft with near 8%, Meta with around 5%, Amazon with around 5%. And if you add the 2 alphabet stocks up together, you're looking not far off 5% on these as well. You're looking circa, 30% of the whole NASDAQ is reporting on 3 evenings this week. This could dominate proceedings even more than the election this week. To me, the earnings season, especially this week in earnings season, can be incredibly volatile. I was talking up the chances of the NASDAQ potentially finding some catalyst to take it through to those all-time highs. And we are still quite a distance away, albeit we're doing a better job than the Dow was at the moment, where we were 800 away before. Now we're 550. A strong earnings out of these names could easily lift this market to those new levels. Yeah, very, very possible if the stars align for these stocks this week that we can see that 800 level. What was 800 points a week or so ago? Only 550 left. We could easily see that 500 point gobbled up on strong news out of these numbers. So I would be watching these with interest. And it's not just these numbers I'm interested in. The spreadsheet that I put together. If you want this, by the way, please reach out to me on Twitter. I'll put it out to you. But we have some other big numbers this week. So let's start with McDonald's tomorrow. This kind of covers this whole week, really. Yeah, McDonald's, we've got the Googles and Visas of the world. But in Europe, we've got BP. Well, more importantly, actually, we have Shell, the biggest company in the FTSE, is due out on Halloween. Hopefully not too spooky a number for the oil giant. Again, big numbers out of the DAX, so nearly 7% of the DAX is posted by Airbus, so that's going to create some volatility on 30th, the day of our budget here in the UK. HSBC tomorrow, along with BP tomorrow. So a lot of the FTSE reporting, a lot of the DAX, the European ones are starting to come through a little bit now. But this slightly earlier time for these numbers, only a 4-hour difference for this week, and revert back to normal next week. But lots of earnings to come through, both in the DAX and the FTSE. But the main ones, as we say, are these big names out of the US and the tech sector. But yeah, that's probably where we'll wrap up today. I think that we've really got to look forward to the election in the week ahead. In fact, it's not even just the election, is it? We look forward to next week. We're going to have, where are we? We go to see the week of the election here. So we've got the election figures. The day of the election is Tuesday, the 5th. 2 days later, we also have a Fed rate decision as well. Unusually, on a Thursday, it's been pushed back a day because of the elections. So on the Thursday night of the 7th, we're getting these Fed interest rate decision through. Expectations are of a 25 basis point cut, albeit not printed on here yet, but let's see how that looks. In fact, if we look at the Fed rate monitor tool, we can price in the expectations. Well, this is pricing in a hole. We're currently at, get the current rates up so you can see them down the bottom of here. We're looking at the US is currently at 5, and we're expecting a move. Oh, the wrong one here. Expecting a move, yeah, holding just to that 4.75 level. So a cut of 25 basis points is priced in with a 97.4% expectation based on the Fed funds futures market. So the market very much believes this will happen. I believe the market. So yeah, let's look forward to the week. We'll go into more detail about the election, I'm sure, this time next week, and what's coming up with the Fed. A little bit to get through between now and then. Jobs on the one hand, but I'd say more importantly, these big earnings out. Have a great week. Go easy this Monday because it is incredibly quiet this Monday, but things should really start to tick on the Tuesday. So yeah, maybe keep yourself busy doing something else. I'm on the 20th.